Over the last 5 years, artificial intelligence has made significant progress, and many more companies are now investing in machine learning and AI. However, we are just scratching the surface of AI's potential and continue to believe we are at the very early stages of massive disruptive change brought about by the advancements in AI and its deployment. For example, our latest research indicates that the adoption level of AI is about 35% in the pilot stage and only 10% extensively incorporating AI in processes or offerings. We expect AI adoption to accelerate even faster over the coming years as more processes go digital and we enter the next wave of true AI automation and intelligence. The recent volatile market conditions are mainly tied to concerns over higher inflation, trajectory of interest rate hikes, and whether tighter monetary policies from central banks can reduce inflation without a sharp slowdown in economic growth. With more clarity now around the monetary policy response to inflation, the market is in the process of discounting the economic impacts of higher interest rates. We believe the market has discounted a fair amount of the Fed rate hike path as reflected in the tightening of monetary financial conditions, which is starting to have some visible impacts on business activity and consumer confidence. We believe companies and consumers are well situated to ride out an economic soft patch given record low unemployment and healthy balance sheets. Our view is inflationary pressures should begin to ease as tighter monetary conditions slow down demand and supply chain constraints ease further as the year progresses. This should help keep monetary policy adjustments and rate hike expectations more in check to avoid a prolonged economic slowdown. We believe the global economy should eventually stabilize and get back into expansionary territory, albeit at a slower rate of growth. As investors begin to anticipate this type of environment, sentiment could change quickly and be favorable for growth stocks. While markets are likely to remain volatile in the near term, we believe certain oversold areas could be in the bottoming process as their valuations are nearing historical ranges. The upcoming downward earnings revision cycle as economic growth slows has been well anticipated by the market and is a necessary step to improving investor sentiment. Longer-term business fundamentals remain healthy as enterprises are committing to multi-year digital transformation projects to enhance their competitiveness and drive sustained growth and productivity through AI. With many developed economies rebounding strongly after the pandemic reopening, central banks have now broadly telegraphed an upcoming series of interest rate hikes to moderate growth and slow inflation. Central bank policies cannot solve supply chain inflation alone, though. We are observing some gradual improvements in supply chain constraints, and commodity prices are well off their highs, which should help alleviate some of the cost pressures looking forward. We are also seeing companies taking more prudent actions and proactively shoring up their operations in anticipation of potential moderation in economic activity. Some technology and media companies have announced hiring freezes or even small-scale layoffs to protect margins. Investments in digital transformation, automation, and productivity-enhancing technologies more broadly remain a priority for most companies and should be able to better weather the storm. Over the past 5 years, the AI universe has expanded from approximately 1,000 stocks to over 1,600. Growth has been across sectors with healthcare, consumer discretionary, and industrials now approaching information technology in terms of number of companies investing in AI. We expect to see more diversification opportunities outside of tech as AI adoption accelerates into more industries over the coming years. We still see healthy demand for the ongoing build-out of AI infrastructure that is supported by the many secular growth drivers including cloud, 5G, IoT, edge computing, electric and autonomous vehicles, leading-edge manufacturing, etc. We are seeing AI get embedded into an increasing number of applications and systems to help make more intelligent decisions. We also expect to see more industries roll out AI projects across more of their operations to accelerate their transformation. We believe that these trends will drive meaningful growth for companies that provide unique products and services across AI infrastructure, applications, and AI-enabled industries over the next decade. While we navigate through today's volatile market environment, we remain focused on investing in companies driving innovation and change. As we look at the ascendancies of some of the largest companies over the past 25 years plus, we believe the single largest driver of their success has been their ability to innovate. We remain encouraged that the pace of technological innovation continues to advance at an accelerating pace driven by the adoption of artificial intelligence.